company shares value will decrease after announcing rights entitlements. Rights issue can lower a stock's value and decrease trading volume, both of which have an impact on the share price. By adding more shares, stock prices become diluted and there may be a downward trend in share valuation. Let's discuss 6 key factors. First key point is rights issue impact on stock value. A rights issue occurs when a company offers existing shareholders the right to purchase additional shares at a discounted price, and this leads to stock dilution. As the number of shares increases, the earnings per share, EPS, decrease, assuming net income remains the same. This drop in EPS can result in a downward trend in share prices as the perceived value of each share diminishes and it creates lower valuation. Second key point is decreased trading volume. Rights issues may not always be attractive to shareholders, especially if the company is struggling. The lack of interest can reduce trading volume. This creates lower demand. If shareholders choose not to participate in the rights issue, they may sell their shares instead, leading to lower demand for the stock and driving the price down further, and it impacts on liquidity. Third key point is market sentiment, perception of weakness. A rights issue might signal to the market that the company is in need of capital, potentially due to financial distress or to fund large projects. This can negatively affect investor sentiment and further pressure the share price down. Fourth key point is short-term versus long-term effects. In the short term, a rights issue generally leads to downward pressure on the stock price due to dilution and uncertainty. This creates short-term pressure. In the long term, if the raised capital is used effectively for growth or debt reduction, the company may perform better in the long run, potentially leading to a recovery or increase in stock value. Leads to long-term potential. Fifth key point is investor decisions, participation or sale. Shareholders must decide whether to take up the rights or sell their shares, which can create additional downward pressure on the stock price if a significant portion of shareholders decide to exit their positions. Sixth key point is share price dilution. The increased number of shares in the market reduces the value of each individual share unless the company's overall market value grows proportionally. These factors illustrate how a rights issue can have a substantial effect on share value, typically leading to a decline in the stock price due to dilution, reduced demand, and negative market perception.